Good afternoon, everybody. We're joined by Andy Lebow of Commodity Research Group. Andy's been joining us weekly for a while now, talking about the energy market and really going over the DOE numbers. And we got a lot to talk to him about. Energy market's been very active, but let's start with the DOE number. Welcome, Andy. How are you?
I'm good, Michael. Thanks for having me on again. It's another Wednesday, so it's time to talk about the numbers.
Absolutely. Active Wednesday.
Very active Wednesday after a pretty active Tuesday, actually. Let me start with the numbers. I thought clearly the crude number was bullish, but the product numbers much less so. And we'll talk about that. The market is taking the report as bullish, obviously. We saw a draw of 5.3 million versus expectations of a 2 million draw. The API had reported, I think, an 8 million draw last night, so maybe relative to API it wasn't that bullish. But to me, the crude number was pretty good. And why do we draw that much? Because refiners are still running a lot of crude through their plants. They're another week of record crude runs. I've been saying week after week that that's going to stop as we go into turnarounds, but yet another week of higher crude runs. And as a result, I look at the variables and where I missed, because I was looking for a draw of 2 also, and where I missed was on crude runs. Now, if refiners are running a lot of crude through their refineries, what do they make? They make products, obviously. And we saw a big build in distillate of over 6 million barrels. And, as we've also been saying over the last couple of weeks, Michael, that distillate was beginning to look like really bullish to, I don't know. And now it's kind of like, not only do I not know, but maybe distillate could shift into the bearish camp. But one thing on distillate, the demand number was so low that it couldn't be right. So we'll probably see a draw next week on distillate. But on the face, that's a bearish number. And for gasoline, that came in pretty much as expected, up 1.3. I think we were looking for a slight build. Again, nothing all that interesting, at least in the numbers on gasoline. There's definitely some interesting things going on in the market. But, in terms of gasoline, it's looking at 24 days supply, which is inventories over demand. The 4-year average is 23, so it's in pretty good shape. The other number that was a surprise was Cushing drawing by 1.2. Again, that's because we're running a lot of crude in the Midwest and the Gulf Coast. So Cushing drew. I think that's going to start. Rebuilding. So to summarize, the crude number was good. I think we're going to start seeing stocks build coming up. So, a little flag on that one. And distillate was bearish and gasoline was neutral as usual.
Interesting. So let's take us through then what's been going on in oil the past few days. I have a chart up right now. We traded down on Friday below $67 a barrel, and here we are now at 70.80. What's your opinion on what's been happening the past few days?
It looks as though WTI is beginning to catch up with the Brent market. If you look at the Brent chart, it's getting close to its year high. I think the year high tick was the print was like 80.50, and Brent's been leading the way. These Brent TIs have blown out to $10 since have narrowed in. I think WTI is certainly catching up to Brent. Now, why is Brent rallied? It's similar to the story we've been telling all year, and I know we've been talking about this every week, Michael, is the Iranian sanctions are coming, it's getting closer and closer. And, we are going to lose. The number I'm working with right now is a loss of 1.1 million barrels a day. And, as we get closer, it becomes more and more real to the market. The Brent is already has possibly already discounted it, and WTI needed to catch up. And of course, the demand, as I spoke about, the demand for crude has been a lot stronger than than what many of us had forecast. And by demand for crude, I'm talking about crude run through the refinery, not necessarily product demand, which is, by the way, still pretty good.
So, regarding the storm that we have heading for the East Coast, how is that? Take us through, like, how it's being perceived as bullish because I guess supply disruption and also demand spike. But take us through both those sides. Is that what you're seeing, that it would be a supply disruption? Because it seems like it's the East Coast that doesn't even have.
Yeah, we're not gonna lose any refinery capacity, but we may lose some distribution capacity. There's certainly going to be dislocation on both the supply and on the demand side. I mean, right now, there's clearly a big surge in demand, and there are a lot of gas stations are reporting stockouts, but that's really borrowed against future demand. I don't think the big infrastructure is the Colonial Pipeline, which transports products from the Gulf Coast to up to the Northeast. It's the main form of transport for refined products. That looks like it's going to be too far west to really be affected by the storm, but it's possible that if it's a real rain event, their pumping stations could get flooded, and that's definitely the thing to watch. Right now, Colonial is saying that they're monitoring the storm, and I think everybody should monitor the storm, but from a trading perspective, monitor the Colonial Pipeline, because that's the big deal in the infrastructure.
Yeah, well, the one thing I can say from being a South Floridian and living through many, many storms is, you're right. Everybody stocks up on gas right now. They run to the gas station, but if you're bunkering down after, there's nowhere to go, and nobody's usually, you can't even really use the oil, and you can't fill up for a while. So it's not that it's everybody's running to the gas station now, but they're for days, and probably if hopefully it's not as bad as they are saying, but if it's as bad as what they're saying, it's going to be a week or two before people are really doing a whole lot or getting any more gas.
Right. Exactly. I mean, we're borrowing, next week the EIA is going to show, either next week or the week after, they're going to show like a huge demand number, right, for gasoline. But then, like you said, Michael, the next, the week following that, or the week after that one, there'll be much less,
so it'll be probably a bit distorted. It'll be interesting to keep an eye on.
Right. And I think, we've had so many storms seemingly coming through here since Katrina. I think traders have gotten used to the flows of the data. But nevertheless, something to watch.
Absolutely. And then, actually, just in the last little bit, equity markets were under pressure to start the day, and we've had some headlines that there's some progress in talks between China and the U.S. And actually, just getting how it relates to the commodities, we have the WASDE report coming out in about 20 minutes, and soybeans have rallied a little bit because they're very sensitive. The ag market's really been hit hard from this talk of tariffs with China and trade war with China. So progress from that standpoint, we're seeing some of those commodities really move higher now. Energy was bid well before that, but some of these other markets coming behind. Anything else you're looking at in the energy side?
Well, it's interesting. It's interesting you said that, Michael, because it's hard to say how the administration is linking the progress on talks with China with Iranian exports. China is the largest single consumer of Iranian crude, and they've so far said we're buying as much as we had had previously bought, which is around 700,000 barrels a day. We'll see if there's any impact, if any, on what China buys from Iran. That's something, just again, to watch. I doubt there's going to be any impact because Iran is very important in the overall Chinese strategy to keep them in the loop for China. So, I don't know if there'll be any impact.
Yeah, well, like you said, being that China is the largest importer of oil from Iran, it's obviously very in focus in anything with China these days, being that they are such a huge user of commodities that they have a huge impact on the market. So we'll definitely keep a close eye on that. These were initial headlines. Who knows if there's actual substance to this or not, but we'll definitely get a lot more information. Obviously, the Trump administration wants to get some progress with China before the midterm elections, and I think China's also using that as a bit of a bargaining chip to kind of pressure a little bit of leverage on the U.S., whatever they can. So, obviously everybody in the market's keeping a close eye on that. What about as we look at the next week? What else are you looking at in the energy market?
Well, the market has been in this trading range. Brent is getting to the upper end. Maybe we break out on the upside, and it could be, maybe another $1 or $2, maybe. We look at. I know you look at probably at the commitment of traders. We had seen a lot of the big speculators liquidating really over the last few weeks. And then last week in Brent, they piled right back in. So probably part and parcel some of this rally is that. This is one of we're looking for a stock draw in the fourth quarter. As is everyone else. So it's one of the most widely forecast stock draws, probably in all commodity markets. But if you go into the first quarter, it doesn't look so good. It actually looks like we're going to see a stock build of maybe, global stock build of maybe 500,000 to 1 million barrels a day, which will counterbalance some of this stock draw. So, I just wonder, what kind of legs this rally really is going to have, even with a breakout, how much is left, how much is really left, particularly on the Brent side, because it's, Brent has already made a big move right up to its, 2018 highs. So that's kind of what I'm looking at. What are the legs to this rally? And
that's what I was going to say. Tell me about that. The Brent spread right now is at almost $10. Where was that spread 6 months ago, and where do you think that spread's going?
Well, I think I think we had talked a few weeks ago, and one of the few times I'm right. I did like Brent over WTI, so I want to pat myself on the back for that. You never get.
Absolutely, a good call is a good call.
A good call is a good call is a good call, and we know over our long careers, you have good calls, and you certainly have a lot of bad calls. And the idea is to try to limit your losses on the bad calls, right? And run those good calls. But on the Brent TI, I really think it still could widen out a bit more because I do think. Well, actually, it's going to narrow in a little here. But then it should start widening once again as we're going to go into turnarounds. Inventories are going to build here, so it may widen again. I don't have any real feel on numbers. That at this point at $10, that's a tough play. Either way.
Yeah, and what about the fundamentals of Brent on its own? What's been driving that?
Well, the Brent is clearly an Eastern Hemisphere crude, right? So we're going to lose. The market's anticipating losing Iranian barrels, which are going to be made up by Saudi, the UAE, some other Kuwait. They've already made up some, but there's going to be a shortfall. And the thing that probably the most important thing, and if you look back on WTI when we started when we made our highs and Brent made its previous highs. The most important thing is that if we lose any barrels from like Libya or Nigeria, the market could be in trouble. It's only up to the Saudis to make those barrels up because there's no spare capacity, and that's probably the single key factor. There's not a lot of room since we're losing all these Iranian plus Venezuelan. There's no room if something goes down. But, if nothing goes down, demand softens a little. Maybe, Kuwait and Saudi are talking about bringing on the neutral zone, which they share. That's 500,000 barrels a day. Let's say that comes on. Things could change the other way. But I think that's one of the things the market has been wringing its hands about, is that there's really not a lot of room right now.
Nice. Yeah, I mean, it's been a pretty interesting trade, like you said. The whole energy market's really been a big mover over the whole commodity market over the past few months. Energy's been whipping around. We've been talking about it's been in a range, but it's been about a 10-15% range. And, we've had some violent moves there. And here we are approaching the upper end of that range right here at this, $71 level. So, it'll be pretty interesting to track things. We'll keep a close eye on the storm and, other storms that are coming behind it and what the actual supply-demand disruption might be. So
right, and any possible geopolitical storm, that's the other thing the market's obviously worried about. Which way does Iran go? What's going to happen? What's going to happen? Yeah, last week there were missiles shot from Yemen into Saudi Arabia by the Yemen rebels, who of course are backed by the Iranians. So there's that storm as well.
Absolutely. I mean, that it sounds like everybody's talking about. We've got China news potentially. We've got Canadian news. Working on a deal with both of them. We've got Iran trying to figure that out. There's a lot of geopolitical headlines that we're waiting on, and so we're going to get some news that's altered and kind of it's waiting on the facts. That's what everybody's waiting on right now. But in the meantime, there's a lot of spikes based on the price action. Right.
It's I guess if you're a range trader, it's okay to trade. You could do all right, but as we all know, it's a brave man selling at the top of the range and then buying at the bottom, right? A brave trader, man or woman.
Absolutely, and even just right now, before we came on, the S&P was trading at 2880. We kind of had this news that there might be a deal with China or some optimism. We traded in the S&P up to 2895, and now we're actually trading back down to 2885. So we're definitely seeing some increased ranges, volatility, some swings. Is actually the market that Larry likes. Where we get some two-way action. And while volatility hasn't really popped much on it, it's definitely a sign that the market is back. It's not summertime anymore, and there's going to be some good opportunities out there. And just same thing with oil. With a lot of that information you were giving us, we're going to keep a close eye on that.
Yeah, there's a lot going on in oil, and it should be a good market to trade.
Yep.
It's always a good market. There's always something going on. There's always something you could do with oil, either outright or spread. There's always something.
Yeah. Actually, so I was going to let you go, but one quick question you had, so you create this great monthly report, Commodity Research Group, where you cover the energy side. Ed covers the metals and macro, and Jim kind of covers a few different things as well. What were you guys highlighting in the latest monthly report?
Well, it's obviously on the oil side, we highlighted a lot of the things we just spoke about, Michael, because they're always key. And Ed is highlighting also some of the things we spoke about. In particular, what's going on in China, and what the effects of the trade war could be on demand or may not be on demand, as well as the dollar, interest rates, etc. And Ed is awesome analyst, and it's a pretty good. It's a pretty good read. It's a very good read because it's fairly concise and you get a lot of information in a concise way.
Yeah,
And
no, it's a very, very good read. It's actually
right.
on our website. It's on your website. And, Ed's actually going to be with us Friday. Ed spoke with us about a week or two ago, and he gives great information on the macro and on the metal side. And so looking forward to speaking with him Friday. But yeah, no, there's a lot. I only asked because there's so much going on right now. It was kind of quiet in July and August, and now, this is volatility's picked up, and there's a lot of opportunities out there.
Right. Yeah. August was a snoozer, but it looks like the fall and into the winter are going to be it's going to be very interesting as we both outlined. Right. There's a lot going on.
Yes. So me and you we're on the same page. We're bullish on opportunities in the coming weeks and months. We'll just have to wait to see what those are.
Hence the name of your company, right?
Exactly. So, all right. Andy Lebow, Commodity Research Group. Great information on the energy markets. Definitely keep us posted as it's going to be a very active next 5 or 6 days on the energy front with all this storm news. Thanks for the info. We'll talk to you soon.
All right.
Thanks, Andy.